G'day. I'd like to acknowledge traditional owners of the land in which we meet, the Whadjuk people of the Noongar Nation, and pay my respects to the elders past, present and emerging. The WA ASEAN Trade and Investment Dialogue is a 2013 election commitment of the McGowan government to support investment and trade opportunities between WA and our region, delivering job creation and economic growth. Delivered on behalf of the WA government by the Perth US Asia Centre, the WA ASEAN Trade and Investment Dialogue focuses on building WA's trade and investment relationship with the Association of Southeast Asian Nations. Of course, this year's event looks very different to previous years due to COVID-19. So I'd like to thank not only the Perth US Asia Centre, but also all the attendees from across WA and the region who will be logging in to participate online during the week of webinars we have on offer. It is of course testament to the resilience, creativity and adaptability of people and business in these challenging times. In Western Australia, up to 500,000 jobs depend on our trade and investment relationships. That is why the McGowan government is preparing now for when we have full access to our ASEAN and international markets. Investment is of course an essential component of economic growth. Investment allows for industries to increase their productive capacity and reach new markets, as well as produce goods and services more efficiently, reliably and safely. Investment by governments is also important. Investment in infrastructure provides people with better ways to work, travel and socialise. However, the COVID-19 pandemic poses a risk to investment. The significant economic downturn across the world has affected the capacity of businesses to finance new investments, and for a time, investors are likely to take a more cautious approach. In Western Australia, we are conscious of these challenges. Unlocking barriers to investment is a priority of the McGowan government's $5.5 billion WA recovery plan. The WA government is working to remove regulatory barriers and streamlining administrative processes to help businesses restart and expand operations quickly and smoothly. For example, in my other role as Minister for Fisheries, I'm committed to creating Australia's largest aquaculture development zones right here in Western Australia. WA's aquaculture development zones are designated areas of water selected for a specific aquaculture sector and provide investor-ready platforms with strategic environmental approvals and management policies already in place. The McGowan government is seeking to support the creation of more than 6,000 jobs in Western Australia through the development of these zones, as well as through government investment in common user infrastructure that supports industry development, such as the Albany Shellfish Hatchery and the Geraldton Finfish Nursery. WA Aquaculture is an example of ways in which the McGowan government is working to attract and facilitate investment and also provide the supporting infrastructure to further economic growth and create jobs. While managing the challenges from COVID-19 is a priority, we shouldn't lose sight of the long-term investment opportunities in both Western Australia and across ASEAN. I would like to conclude by thanking today's speakers for sharing their experience and knowledge, and formally welcome you to today's session, Unlocking Investment Opportunities. Thank you.
Good afternoon and welcome to day 4 of what is a week-long series of daily panel discussions that are making up the 3rd annual Western Australia ASEAN Trade and Investment Dialogue. Let me express my particular thanks to Minister Peter Tinley, who serves as the Western Australian Minister for Asian Engagement. I would note that 7 years ago in opposition, he led the charge to create that portfolio in a shadow position, Shadow Minister for Asian Engagement, the first one I think anywhere within Australia. And his efforts have led not just to the last 3 years of this dialogue, but the launch of a Western Australia Asian Engagement Strategy. And so a lot of what we've been doing really has been done in that context. Those of you who have been with us earlier this week know we've had a broader conversation about COVID particularly. We've had a deep dive look at agriculture, and in particular agribusiness and its connections between Western Australia and ASEAN. And yesterday we had a fascinating discussion about the energy and resource sector. Today we're going to look at something that kind of underpins everything we've discussed today and I think probably everything that is going to go forward. And we're going to be focusing really on investment. For the average Australian, if I were to say the words Asian engagement, it would probably bring first to mind the basic concept that has driven our economy from the very beginning, selling initially wool, or other agricultural products to the region, or in recent years selling iron ore or LNG. So it's very transactional. It's all about exports. It's all about sales. As we have developed in terms of our own capacity, our own technology and capabilities, more forward thinkers have expanded that view to selling services, selling the knowledge base that we built here in Western Australia. But there's an even more important aspect of economic engagement with Asia that doesn't get nearly the amount of attention that it deserves, and actually is arguably far more important than actually the final point of that process, the transaction of trade itself, and that is investment. We are very fortunate today to be joined by a wonderful panel of experts from throughout the region to help us think through the broader question of investment and unlocking the investment opportunities between Western Australia and the countries of Southeast Asia. We're joined by Anita Prakash. Anita is the Director for Policy Relations at the Economic Research Institute for ASEAN and East Asia. That's a Jakarta-based think tank, close relationships with Japan. We've been delighted to work with Anita several occasions in the past. Very recently, she wrote for us a wonderful analysis looking at India and RCEP. And so that's the Regional Cooperative Economic Partnership. It couldn't be more timely this week, given the recent signing of that agreement. But prior to her career in Jakarta in this think tank, she worked for the Department of Commerce in India. She worked for Niti Aoyag and has had several other posts throughout Europe and the rest of the region. She's really one of the preeminent thinkers on the Indo-Pacific and Indo-Pacific regionalism. We're delighted to have Anita join us. We're also joined by Daniel Moss. Daniel Moss is the Asian economics columnist for Bloomberg Opinion. If I recall correctly, the last time I saw Daniel was actually in Seoul at the tail end of last year. And it's a strange moment for me, someone who's been in Korea every year since 1987, to recognize as we hit November that it's probably unlikely that I'm going to keep that streak alive this year. Daniel is based in Singapore, so he's done me one better. He's actually in the region, a place where I won't be this region, and has had a long career with Bloomberg and in journalism, with postings in London and Washington and New York, and now in the commentary team. Is actually someone who's not going to just ask questions today, but he's going to provide us opinions. So Daniel, we're delighted to have you join us as well. And then finally, we're joined by Sherman Mok, who's the Executive Director of the Waleta Group. Sherman is actually joining us from Melbourne, which, looking at it from a WA perspective, Melbourne, it might as well be Singapore or Jakarta. We've been cut off from Victoria for the bulk of this year. But Sherman has had 25 years of banking experience in investment and advisory positions. He's had senior positions with global brands that everybody will know, such as Citigroup and HSBC, Westpac, et cetera. And now kindly shares his advice and his insights with private clients, but today shares them with us. And so thank you all for joining us. I greatly appreciate it. So I want to just start off with an opening round of questions. And that is, you won't be surprised to know that governments in Singapore or Victoria or West Australia or Jakarta or anywhere are all focused on one thing right now: jobs, jobs, jobs. And I think most of them recognize a need to maintain or revitalize their trading relationships, particularly the countries I've just mentioned: Singapore, Indonesia, Australia. They're key to us. I'm not so sure that there has been nearly enough dialogue around the importance of investment. And so I want to just kind of turn to you with that basic question. In WA ASEAN relations, and in our shared objective in the countries of Southeast Asia and Australia of revitalizing our economy, how important is investment as part of that strategy? So Anita, we'll start with you.
Thanks. Thanks, Gordon. Very quickly, the investment patterns up until now, till a couple of years back, was largely the Asia-Pacific model of investment, which was initiated by Japan, which eventually sort of took away the import substitution model and led to the export growth model. But soon as ASEAN became a major center of production, and of course, the preeminent rise of China, that sort of investment into manufacturing, parts and components, the whole production network or the global value chains as we know them, that became the face of investment in the region. And it was during that phase up until now that Australia had a major presence, not as major as bigger partners, bigger economies, but then considering that Australia itself is a huge economy in terms of size, relative to that, its presence in terms of investment in this region is rather low as compared to other countries. But I'll come to the current phase now and to explain that even while investment into production networks still continues to grow, notwithstanding the COVID crisis, when there is a demand shock all around us, and the current production systems are in a bit of a stagnation, may likely go into decay also, but we have not reached that stage. But hereinafter, there is a plan at hand, and why investments must sort of refurbish its presence in the region, and why Australia, Western Australia in particular, which used to be a resource-based economy, how it should present its investment in this region. And that is, we spoke about this in the preparatory stage. The next phases are going to be into digital economy, the global value chains of digital economy, and this region is now more than ready. If it's not ready, then it has to be ready. And Australia has an opportunity for investments in that sense. Developing Western Australia, which is 5 hours earlier than the eastern seaboard of Australia for rest of Asia. So developing Western Australia as a kind of a financial hub, a human capital development hub, all the elements that matter for a digital economy. The expertise is already there in Australia. So this is the way I see how investment has evolved in the region. And this is the way forward I see how it should move into future, especially where Australia and Western Australia's role is concerned. There are 2 important cautionary notes here, and it is this, that Australia's slightly eminent position in terms of investment is actually eroding over the time from 3% of ASEAN's total investment. It has now come down to 1.5%. While other economies, which are not necessarily a part of this region, e.g. EU, USA, these are not even part of RCEP, the much touted trade agreement. They seem to be gaining a major foothold. They already are, and they are edging out the traditional investors in the region, that is Japan, Australia, but China also to some extent, but China is a different issue. It's more because of the vertical integration of its own value chains rather than any disinclination on part of China. So that is the picture that's emerging of investments in the region. And Australia has to take note of these 2 important, that the players outside the region are making a huge presence here, number 1. And number 2, the assets within Australia are not getting utilized as much as this region would have liked to or requires to benefit it.
Very good. Thank you so much. Daniel, your initial reactions as we kick off this conversation.
Investment is important. It's considered a long-term plus, a long-term essential. But sitting here in the middle of ASEAN over the course of the past 9 months, it's very much secondary, if not tertiary. The first line of defense in combating the pandemic recession has been monetary policy, followed closely by fiscal policy. Issues related to FDI have come in third. Were it not for the exception of the fanfare regarding the RCEP agreement this past weekend, it had been a long time since anyone heard anything about an ASEAN economy. the region is going through an existential recession, far deeper and raising far bigger questions than the 1997-1998 Asian financial crisis, which was seen as having broadly homegrown roots exacerbated by some idiosyncratic political structures, which were just waiting to blow over, such as Indonesia in 1998. Each of these countries is looking inward as they are trying to combat the pandemic. There are a number of very distinct characteristics which are reshaping each of these key ASEAN component economies. Let's talk about Malaysia. Malaysia has not just an economic crisis, but a political crisis, which has been running either hot or lukewarm, basically since March. Now, once a bastion of governmental stability, Malaysia faces the very real prospect of its fourth government in 3 years. Prime Minister Muhyiddin, who came to office through a backroom deal when Mahathir's coalition unraveled in March, has not faced many sessions of parliament. His majority, depending on how you count it, is either 1 or 2. He's had a number of near scrapes. He asked the king to declare a state of emergency a couple of weekends ago. The king declined. A side chapter of that is that the Malaysian monarchy, which is often very much in the background in a classic constitutional monarchy sense, is now in the foreground. And it's hard to see that toothpaste being put back into the tube. Indonesia, where this centre spends a lot of time. Right now, there's a titanic battle going on between the interests of labour and the interests of capital. A very contentious overhaul of the nation's labour laws was passed last month. It had been about a year in the making. Ever since Jokowi's re-election, he was talking about the need to loosen up the labour market. Now, it's not an easy thing for any leader to undertake in the midst of a recession, but he did it. It was wheeling and dealing all the way. A lot of compromises, a lot of lighting of legislative Christmas trees, a lot of demonstrations, some looting. That's now under challenge in the Constitutional Court. Jokowi has been throwing a few incentives at the court in an effort to persuade the judges to see the logic of his case. So we'll see what happens there. The Philippines was actually the star of ASEAN growth-wise until this year. It had had a bit of a reputation as the sick man of Asia, but Duterte's pyrotechnics notwithstanding, the Philippines have clocked an average of 6% economic growth every year until now. Two of the attractive things about the Philippines, the export of human capital and the growth of the BPO, the business process outsourcing sector, have been jeopardized by lockdowns and the inability of people to travel. I'll say just a little bit about Singapore, where I'm located right now. It feels like we're on the cusp of the next phase of the reopening. I am actually making this afternoon my first trip to our office since March, so that's very exciting. There's been a distinct change in the way the discussion about the role of workers from overseas in Singapore has developed. Singapore has thrived as a hub for shipping, for airlines, for tourism, for technology, and the capital and the human beings that go with that. One feature of this recession is there is an awful lot of emphasis, understandably, on the employment needs of Singaporeans first and foremost. Completely understandable, given unemployment is rising. And this is the deepest recession since the divorce from Malaysia in 1965, by any measure. But it is a change. The government suffered a bit of a setback in elections here in July. The opposition won more seats than they ever had. The PAP is firmly in control, but a number of things have changed. On election night, Lee Hsien Loong congratulated the leader of the opposition and offered him the formal title of leader of the opposition, complete with title, office, staff, resources, access to national security briefings. Since then, the issues that have come to the fore in parliamentary debate and ministerial commentary have been the opposition's issues. A lot of emphasis, not just on promoting jobs for locals, but also an emphasis on not quite calling out, but giving scrutiny to foreign employers perceived to be not doing enough for the local workforce. That's a big shift. I think it's a shift that's going to be a challenge for Singapore to manage and for the businesses and investors that have flocked here for the past few decades. Now, regarding what folks here say about investment coming from Australia, they might ask themselves, Australia, what's that? You know, when I get in taxis or I talk to people at cafes, socially distanced, of course, they say, oh, what part of Australia are you originally from? And I would say Canberra. They said, yeah, don't know so much about Australia anymore, but I'm hearing a lot about Victoria and I'm hearing a lot about Western Australia. What's the relationship between these states and the Australian government? Looking forward to hearing people's opinions on that.
Actually, in our first two commentaries, there's a lot that I want to pick up. But before we do that, we're happy to have Sherman here give us a little bit of a kind of a industry perspective or private perspective on this as well. So Sherman, your insights.
Sure. So for me, I think when I look at this, it's a mixture of many things, right? A lot of us in the private industry, we always try to look at history or what was done in the past. So one of the things that we like to jump to was the last financial crisis, right? But the truth is, this is not a financial crisis that is only based in, say, Europe and America, right? This is the whole world that is actually going into recession. So it's a very different kettle of fish. So you'll see certain things like tech stocks has gone crazy, certain stocks has totally, gone under and so forth. So this is where it's really interesting too, from a private, from the private side of things, when we look at it compared to, say, a governmental geopolitical issues that we have. When COVID hit, most governments went into lockdown, literally, for investments from outside of their countries, because they were worried about sovereign risk, about who owns what and so forth. So you'll notice in Australia, as an example, we have to look at foreign investments and so forth into Australia, just in case that somebody takes over a national security asset or something of that nature. And you'll see that happen all over the world. In many ways, they were all going into effectively locking down the financial systems and also the flow of investments. The truth is, going forward, this is where it's going to be exciting. How do we actually solve this post-COVID, or the new COVID norm, let's call it that way, where investments needs to actually start flowing, the bilateral side of things? Do we in Australia still look at investments in the old style, whereby it's so heavily based on property effectively in a lot of parts of Australia in that sense? Even the government, for example, is trying to, in some ways, the federal government is trying to manipulate flow of funds and so forth by actually throwing out the findings of the Royal Commission in banking, in all honesty, and make lending a lot easier in some ways. So that is something that I think we need to look at and watch, especially in the longer term, what will actually happen as a country about all this risk that we're going to take on. And let's talk about bilateral investments, about both in and outward. One thing that we keep on forgetting, Australia has one of the largest cash reserves in the world because of our private superannuation. What is the private superannuation doing? They throw in the old days, what we call, I call it pre-COVID, hotels, as an example, investments into infrastructure, buildings, right? They don't throw into things like technology that much because they don't understand it, and it's a longer term play in that sense. And then you look at other countries like Singapore, even Indonesia, for example, and India and China, they start throwing money into other things, such things like technology and so forth, right? So it's, and food security. That is something that we haven't talked about. It's about things like in food security. Singapore is an example where Daniel is. I'm sure Daniel will pick me up on this. Singapore government has this thing about by 2030, this was just before COVID, that they said that what they actually want about self-sufficiency and so forth. And this is where I think that bilateral investment may actually come into like the food security play, where Singapore needs to, as an example, take from 8% of its self-sufficient food to 30%. By then. So those parts of technology in agri-play and agri-tech may come into play, health tech and so forth. When we talk about whether there is a lack of funds, it's a very interesting one, because the truth is, I think once things stabilize, people will realize that we have effectively hoarded a lot of money within our own infrastructure or our own society. We now need to actually make it grow, because in the private sector, the shareholders are the one that wants the returns. And if you can't give them that return, this is where the issue will start, right? So you start to have the destabilizing of banks and so forth. I've also taken a few notes about what Anita actually talked about, was actually about things like in Indonesia itself, about that balancing of the issues they are starting to have within. And I think that is actually happening not just in Indonesia, but almost every country. Most governments, to me, have become very inward looking. And Daniel and us, we had a conversation just before this about human capital. How is it going to move when talent becomes an issue for investors in certain parts of the world? So yeah, this is just my 2 cents. And I think going forward, you're going to see the private sector still wants to do deals. One of the things is capital is very cheap all over the world now, because every central bank have decided to basically say zero interest in that sense. And how do we actually make sure that doesn't create another disaster post this is going to be an interesting one. Yeah, so yeah.
Well, thank you. I want to come back to this question of the movement of human capital, the impacts of the COVID pandemic on that movement and how that impacts investment. But before we do that, I think we need to look at several other big picture things. And we're going to come back to the human capital movement thing. The first is Australia's outgoing foreign direct investment into the region. You know, Anita was very generous in not calling out Australia's relative influence in the region as being pathetic, right? I mean, if we've gone from 3% to 1.5% in our nearest neighborhood, it's kind of like, you know, the United States didn't know that Mexico or Canada exists, right? It was not involved in the area. We're just not engaged in the same way. And Sherman, you rightly pointed out that despite the tremendous resource that Australia has, you know, those tend to go into, you know, the super funds tend to go into the United States or the EU or much more safe investments. Australia is not a major driver of investment into the region. So I want to start talking about that first, the Australian role in terms of Australian investment in ASEAN. And I want to kind of challenge, or at least get some further thoughts from Daniel on his notion of short-term priorities, because I think it makes perfect sense that in the current situation, Daniel, which you described searingly well, that governments are focusing first and foremost on monetary policy and then in fiscal policy. But my presumption is that longer term, as they start looking for new growth, new jobs, there's going to be a resumed focus on attracting foreign direct investment. And so next we're going to come back into ASEAN investment in WA. But for the meantime, just to stick with ASEAN investment, incoming foreign direct investment going into ASEAN. Do you see that shifting post-COVID? Do you think there's an opportunity for Australia to rethink its approach to foreign direct investment and to be more of an influential player in ASEAN than it has in the past? Maybe we'll start with you, Daniel, then we'll go to Anita, then to Sherman on that one.
Well, Gordon, there's certainly an opportunity. The question is, can Australia, and specifically the Australian private sector, be they investors or be they corporates, can they seize it? You know, when I last lived in Australia in the mid-90s, I thought the debate about Australia's place in Asia had been settled. It had been settled across the political aisles. It had been settled in academia. It had been settled in Martin Place and settled on Collins Street. I now learn that by far the bulk of Australian FDI abroad goes to the United Kingdom, New Zealand, North America, and I think last list I saw, Singapore was equal number 5 with Germany. Look, that's just pathetic. The opportunity is here. Can we grasp it? Now, Sherman was talking about the superannuation industry and the pool of money available there. You know, can Australian investors think beyond the next reporting quarter? If you're going to go into Asia, ASEAN, in a meaningful way, from an FDI perspective, there is a lot you have to negotiate. So it's amazing to me how many people in the US say, oh, ASEAN, it's like the EU. No, it's not like that at all. You have 10 different investment profiles, 10 different judicial systems, 10 different competition policies and the like. It's hard work. Do we have the fortitude, quite frankly? When the dust settles from the pandemic era, you know, there'll be a realization that perhaps this region's best growth years, not necessarily its best years, but its best years of GDP growth may be behind it. You know, when I was living in Malaysia in the late 90s, prior to the financial crisis, annual growth around the region of like 6, 7, 8%, not unheard of. It was the norm. Pre-COVID, it was probably around 4 or 5%. In fact, in Indonesia, it didn't vary from 5% quarter in, quarter out, almost looking a little like Chinese statistics. Nevertheless, there needs to be a fresh engine. Maybe that fresh engine comes from FDI from China. Maybe it's a renewed emphasis from Japan, which, by the way, has never been out of the game in ASEAN. For all the talk about Japan having 3 lost decades, Japan is an enormous FDI investor in Southeast Asia. You know, all Australia has to do is get a relatively small part of this, and it's doing much better than it has been.
Fantastic. Anita, to you.
Yes, thank you. Daniel, much of what you said is spot on. There is no doubt that the growth rates of the past decade, they are most likely not coming back. But then that is not just true for ASEAN, that is true for nearly every part of the world, but more so in Southeast Asia and South Asia also, although some small pockets like Bangladesh, etc., may witness some phenomenal growth in the near future. But having said that, we are still sort of taking a prismatic approach to this narrative from the growth coming out from trade, mostly in goods. Trade has grown about 2%, 2.5%, sometimes touching 3%. But services has grown phenomenally, about 24, 25%. And that having been said, and considering that ASEAN has a huge services market, although not very diversified, I must admit, travel and tourism and property are still a few of the largest drivers of services trade. So ASEAN requires diversification, but the real script over here is that this pandemic, like all the last ones that any one of us could remember, at least our generation remembers it through academics and books, In the post-war scenario, when countries were sort of pulled down in every manner, social, people, economy, and yet when the building back started, it was what is called the Build Back Better, and which is, we are already seeing some green shoots in terms of EU, UK, and even somewhere the ASEAN ACRF. All of them have recognized that building back from COVID will be for building back better, building back green. Even China has come out with a date for carbon neutral society. Of course, Europe has a much nearer date, and they are actively engaging their production bases and supply chains in conforming to the deadlines that they have set for themselves. In a similar manner, somewhat, in the ACRF, ASEAN has also brought in those factors that going back to business as usual is neither an option for ASEAN, nor it is desirable. And if this is recognized by active partners like Australia, let us not be too unkind to Australia's investment in ASEAN. Australia has a huge intangible commitments in this region in terms of institutional networks, institutional sharings. Daniel briefly mentioned competition policy. Much of the framework on competition policy that exists in ASEAN is by virtue of economic and technical cooperation from Australia. Similar goes for homeland security and so many other things which are rather invisible to eyes, but huge drivers of social cohesion in ASEAN. And these intangibles never get factored into our day-to-day assessment of relationships. But having said that, if we are down to basics, we still need to understand that ASEAN is pretty much ready to rebuild along green terms, along digital terms, along a more social secure terms, notwithstanding reviving its current networks. If I would like to, the screen sharing is disabled, but it really doesn't matter. I would just like to add one thing, that in terms of FDI, why is it that intra-ASEAN FDI is the highest among all the partners of ASEAN? And the fact of the matter is that even though movement of capital is not free within ASEAN, because ASEAN Economic Community is not the same as EU, labor mobility is also de facto rather than de jure. But just one single factor, the movement of produced goods, just one freedom, and of course tariffs below 95% of goods between 0 to 5%. Just one major factor makes it so much easier for intra-ASEAN FDI to be highest among partners. Then number two, EU was very, yes, of course, Japan I mentioned that the Asia Pacific model was started by Japan. Why is it that EU edged out Japan eventually, although EU has now come back to the third position after China came in? The reason being that EU has been much more methodical in its approach towards investment, as well as allowing movement of people. They have put in exemplary processes, but most of it is unseen and seamless. The other partners of ASEAN have not been able to put in place an equally seamless processes for movement of people. You cannot have investments, you cannot welcome investments without welcoming people from other regions. And that is a point which Australia and other economies need to.
Very good. So we're going to come back specifically to the movement of people, but first I want to go to Sherman, if I could.
So one of the things that's, I think it's what both Daniel and Anita's observation is correct. one of the big problems I see from a private sector perspective, and even the government perspective in many ways, is that in Australia ourselves, we had almost 30 years of no recession at all, right? Compared to, say, what we want to call our Western counterparts, where all of them had to go through their ups and downs. So we had, in many ways, and I'm opening a can of worms, and I'm going to most probably get some hate mail about this, we have lost our ability in some ways within Australia, a whole generation that understands how important Asia or ASEAN is in many ways of investments. As an example, even in the private sector, or in private sector in both, say, for example, in company boards and in fact in media, as an example, in Australia, we have a major issue in Australia. When we look at it, 60% of Australians, more than 40% of Australians do not come from an Anglo-Celtic background, as an example. And Asia is one of our biggest trading partner. ASEAN is up there. Yet in our board representations, as an example, in Australia, there's only like 2% that are Asians. Right, so this is where the problem we have. It's large corporates, the ability to actually look at Asia from an Asia engaged point of view. They don't even have that skill set. The government is the same in our Australian government, and don't even go to our media in that sense. Our media doesn't even understand what a lot of times, if you look at, this is why I encourage most people that I advise in Australia that's looking at Asia or other parts of the world, in fact, do not just watch Australian TV, the mainstream channels. If you are really interested in investing in other parts of the world, go and watch CNA, go and watch CNBC, right? Go and watch Al Jazeera, go and watch Bloomberg as an example, or read Bloomberg's in many ways. So Daniel, I do read your stuff a lot, Bloomberg, because in Australia, our media is so inward looking. Right? We only look at Australia as this little thing that is, the world revolves around us. But in ASEAN, it's almost the opposite. In ASEAN, they actually know a lot of world affairs because they are forced to in many ways. And this is really interesting. I get a lot of comments from people a lot of times, even as a banker for so many years in the past. Sherman, why do you speak English so well? And I go, why are you asking me that question, right? Or the other thing is, even though I'm a proud Australian, the next question is, where are you from? And I tell them I'm from Victoria, and in particularly Williamstown, and they go, no, where are you from? So it's always really interesting. Whereas even when I'm in America, when an American counterpart will ask me, hey, where are you from? I say, I'm Aussie. That's it. I don't get the but or why. So this is where I think the capabilities in Australia, it's so important for us to look at that diversity and that diversity in thinking. And going back to why our systems and so forth, it's built around, in many ways, inward, and we don't look at the outward ways. And then we start complaining when a foreign government comes in, or foreign company comes in and buys over our internal thing. And the other thing I like to challenge even the private sector, how many international brands has Australia built in the last 30 years? The last one that we actually built that was a famous international brand is actually Woolworths. So this is where we have to understand that we think that we can, but the ability, it's really scary in that sense for that. And this is where it's interesting that I challenge that most, in fact, I think most people that are watching this that are from other countries to also understand that the quirks, like what Daniel said, between different parts of Australia, we are almost like ASEAN, right? We, in some ways, ASEAN has some of the richest economies in the world and some of the poorest, all in one GDP, in different parts. We cannot take a one size fits all. It's almost like in Australia in some ways. We have WA, for example, that is quite different from Canberra. And yet our government thinks from a Canberra point of view and doesn't understand that each different state has different strengths and weaknesses, let's put it that way. And one of the things that I challenge anyone, a lot of times when they start to look at expanding their business into other, whether they want to expand it within Australia or other parts of the world, one thing I always tell them is look at one very simple thing. We call it population density. In WA, as an example, we have 2.5 people per square kilometer. Whereas if you look at anything like Singapore or Indonesia or Jakarta, for example, you're looking at almost 10,000 and above per square kilometer. That's a very different market. And this is something that for long-term investments, we need to understand that even from Australia going out of Australia. And also for those that are looking at investing in Australia, these are some of the things I think we need to actually look at.
Well, having lived in WA for 7 years now, I want to know who the other 1.5 people are doing inside my square kilometer. So it works out well. Hey, thank you. Those are very insightful comments. Sherman, I really appreciate your focus on the importance of diversity as part of a diversification strategy. You won't be surprised to know that we as an institution at the Perth US Asia Center have spent the better part of our last 7 years focusing on diversification, because of our national economy's particular dependence on a single export market and a very small group of commodities. That thanks to COVID, thanks to the ongoing trade war with our largest trade partner, I think there's more receptivity to that narrative than ever before. But without the diversity within the boards, whereas every board in Australia has this assumption they have to have a China policy. They don't necessarily have the assumption, even with RCEP, they've got to have an ASEAN policy or an India policy, et cetera. So that is a good chunk of diversity getting there. Let's segue. Let's just have a short conversation if we could. I want to come back to WA, investment into WA and what WA needs to do more. But all three of you have mentioned in different ways the importance of the movement of people. And as we are all experiencing right now, more than any time in any of our lifetimes, we're having an impact of this pandemic, which means people can't move around. Can you all just address, again, let's keep it short because we've only got about 10 minutes and I got a few other questions. What is the likely impact of the COVID pandemic on the movement of people, and then how does that relate to investment? Maybe we'll start with you, Daniel, and then Sherman, then Anita.
It's a great question, Gordon, and I wish I could pretend there was a single answer. There isn't. Let's talk about the place where I am right now, Singapore, which, as I said at the start, has prospered from being a hub for labor, capital, shipping, tourism, finance. One of the reasons Singapore has been so proactive in the past couple of decades about attracting global talent is not just the regional hub argument, which has been successful, but Singapore faces demographic challenges that in some ways make those faced by Japan and South Korea, which a place you're very familiar with, look pretty pale by comparison. The fertility rate in Singapore is about 1. When Singapore's, the replacement rate generally is 2 for any society. I think Japan is 1.3, and I think, Gordon, correct me if I'm wrong, South Korea is just a little south of Japan's. Singapore is 1. When recent population data were released, it was the first time the country's population had declined, actually declined, not slowing growth, declined in a good number of years. The number of seniors, folks over 65, has increased dramatically. Now, that's a real challenge if your populace is perceived to be cooling to immigration and somewhat less enamored of the role of workers from overseas. So what is the solution? The solution inexorably means a greater role for automation and a greater role for robotics. Now, Singapore has been fostering technology investment. My sense is your average Singaporean worker, just like your average worker in Europe or the Midwest of the United States, is deeply ambivalent about that. There's a national conversation that has to be had. You know, it was fashionable to talk about Asia's demographic dividend, you know, particularly the Southeast Asian demographic dividend. Well, you know, there aren't that many places now in Southeast Asia that have a fertility rate 2 or above. In fact, I can think only of the Philippines and Indonesia that can currently boast that. Most other places are getting old very quickly. There's, you know, a conversation that has to be had there. This might not be the time to do it in a time of deep recession and rising unemployment, but for all the attention that issue gets in the West, it's simmering away here as well.
Thank you. Sherman, thoughts on it?
So I think what Daniel said is correct in some ways about the demographics, and I want to touch on that very quickly about attracting inward investment, say into WA or Australia in that sense. One thing that we need to understand too, ASEAN has a very different age average. As an example, Australia's median age is about 38, and Singapore is actually around 42 now. Right, so it's an aging population. And one thing that we need to look at is things like Indonesia and things like even Vietnam. The average age is below 30. So one of the more interesting things is they have a lot of younger people that are not just tech savvy, right? From those countries like Vietnam and Indonesia, because they were basically born with a mobile phone in that generation. And also the wealth that they actually created. Meaning that when they look at investments into Australia, we need to be sort of like inverted commas. We do not want to invest in what our parents made the wealth from. We want a new age, cooler thing in that sense. So say, for example, they may go, oh, my parents made their wealth in food manufacturing. All of a sudden, the child goes, I want to be more hip, right? I want to invest in digital technologies or things of that nature. So, and a lot of times in Australia, we forget that. We forget that these young people are actually, some of them, not all, a lot of them are not, but the top quartile is extremely wealthy. And they are willing to invest in new technologies, be it in solar, be it in renewable energies, anything that they were brought up to them that was going to create a problem. Right, so this is something that we need to look at as well about the human side when we start pitching things at them. And some of the more frustrating things that I have with some of my clients is when they go and pitch for an investment in Asia, they will turn around and sometimes tell me, but that guy is still in his diapers. How can he invest 10 million into my play? Just because he's in his 60s as an example. And I tell them, you need to understand how their wealth got accelerated and grown. Singapore is an example. If we were to take Singapore back 30 years ago or so, or even 50 years ago, remember this, Singapore had to actually sell Christmas Island to Australia to survive. Today, I'm sure Singapore, if you tell them, do you want to buy Christmas Island? They will be happy to write a check that was worth more than that, right? With multiples from that standpoint. So we need to understand that the growth of wealth is accelerated very differently in different parts of Asia. So when we talk about ASEAN, as an example, Myanmar, all right, because they are the new economy and so forth, it's not going to happen in the short term, but in the longer term, they will start building that wealth, maybe, right? And Laos, for example. So there are many different ways to look at it. Thailand, as an example, is going through some hurdles at the moment, but the wealth in Thailand and the average age in Thailand is relatively young. And the wealth for some of the large Thai conglomerates, people don't realize they have conglomerates there that would be happy to invest in Australia if we have the right things for them. They have conglomerates there that employs 150,000 people worldwide, as an example, right? So this is something that we need to understand, that different parts of Asia, in ASEAN, has different niche that they want. And to attract their investment, it's quite different from how we need to make sometimes a lot of our paperwork easier, to, in all honesty, for them to actually do business. So yeah, going back to, I think, the manpower thing that we talked about, it's something that is important for us to actually look at it from that little nuance in that diversity in thinking. And even if we want to attract investments, how do we look at it with a different lens instead of our biased lens that we have on ASEAN? We really have to start looking at it from a more little nuance that's in there that is totally different from what we are normally used to.
Thank you. Anita, we're going to transition to talk about kind of incoming foreign direct investment into WA in particular, but I want to see if you had anything further to add on the movement of human capital and this ties to investment that we've been discussing before.
Yes, absolutely. I've been thinking that recognition should be placed where it is due. I understand that these are also political leadership issues, and that is not something that we have much influence upon, but it is always worthwhile to put it on to people like Gordon, who are then sort of slightly closer to the policymakers in Western Australia. And this I would like to add here. We have already started looking into future. As with the financial crisis, the Asian financial crisis, when ASEAN had a V-shaped recovery because the demands were intact in other parts of the world. As with GBC, where we had a more relaxed upward recovery, GFC, the pandemic will be behind us. There is no doubt about it. One should not be in doubt of that. When and where is a different question. Ideally, policy planning starts early. So what is the advantage that lies with Australia? Number one, the churnings around Australia that need to be seen, because internationalism will be the new game in the town. It is no longer, bilateralism is not going to help far too much. So if Australia and Japan have a good working relationship, then Japan's quality infrastructure can actually be aided by Australia's own resources, its traditional wealth, and taken into third places. So here I am talking about ambitious internationalism, working with partners into third partners. Second, digital economy in which locally China, Japan, and to some extent Korea also will have a longer reach. Digital economy will still be played around the internationally recognized languages of English. And Australia will have an edge in that, in training human capital for preparing. Because for all its richness, the ASEAN region requires a human capital that is capable of serving and the value chains of digital economy. And Australia has a very important role in that, as I see. The churnings in the financial markets around Australia, Hong Kong, Singapore because of various other reasons, but Hong Kong more so. There is no reason, and especially because Australia has a historical track record in financial and investment management, I see no reason why Australia cannot play a more proactive role. And I mentioned this about Western Australia because Western Australia is 5 hours earlier than the eastern seaboard of Australia. And to develop, there is a lot of capital in Asia which is looking for investment centers which have rule of law guiding both movement of finances, and Australia has that to offer. Let me put it very frankly. What is it that Singapore offers to foreign investors? It is the presence of rule of law. it is the presence of laws that guarantee diversity and respect diversity. So if these assets are available within the Australian legal system and the Australian society in general, why it cannot be expanded and new opportunities harnessed because there is no doubt that Hong Kong's future will be overshadowed. And already UK is making a strong bidding in this region through its application for partnership with ASEAN. I'm working with them very closely. So why we are having new partners in the region when old partners cannot exploit their existing strength, which are already present in Australian society?
Well, thank you.
Yeah.
One of the things that, and I won't pretend I'm a physicist, but I think that Einstein's theory relatively missed is the more interesting the conversation, the quicker time goes. And we've already hit the top of the hour here. We have about a 5-minute window if our panelists will be generous with me. I do want to turn a last question back to kind of a WA specific question given our audience here. And just, if I can just add a little bit of context to the conversation we've had thus far. Per our conversation, there's relatively little outgoing foreign direct investment from Western Australia in particular into our near neighbors in ASEAN. Some of them, have been more traditional. So Austal Shipping's, investments in the Philippines and in Vietnam kind of follow a much more traditional Japanese or Korean or US kind of model investment in the region. Others have been more collaborative. So the second largest company in the state, CBH, Cooperative Bulk Handling, the grain company, have built a collaboration in Indonesia and Vietnam called Inflower, where they are essentially providing a market for West Australian wheat that goes into the region. So those have been interesting. But the real story for us here in WA has been the other way around. We have a state economy that has largely been built on foreign direct investment in our resource sector, Japanese, American, European, increasingly these days Chinese or South Korean even in this process. But there is a remarkable paucity, a lack of investment from Southeast Asia. Now, Sherman just kind of talked about, these next generation Thai or Indonesian or even Vietnamese or Filipino kind of investors who maybe in the COVID environment are looking for what Anita was talking about, a rule of law. So the final question I want to wrap up on is, if you're a WA business here and you're looking for post-COVID growth, is ASEAN a place where WA should be looking for new sources of investment in that next wave, as opposed to the ones that kind of drove the last century of our growth here in the state? So we'll go very quickly, because I'm eating into your time here. Anita, then Sherman, then we'll wrap up with Daniel, if we could.
From ASEAN into Western Australia, it's a slightly tricky one, but I would still like to take a shot at that. I will not go into where Sherman is is closer to the lot about which he spoke, the young generation which is into wealth and are looking for opportunities, although that's a reality. But I have not studied that group very closely. There is no doubt that there is a lot of wealth untapped in this region. And here I don't just talk about financial wealth. There is a lot of capacity also available in this region, which can be utilized should the Western Australia economy want to diversify itself. But then before utilizing that capacity, some amount of preparatory period or preparatory conditions have to be created within the Western Australia. And that included some amount of capacity, I should say familiarization with issues. But I would say that there is a lot of movement of finance that is available, possibly not by way of FDI in the traditional way we understand, but if you create an investment hub around Western Australia, then the way the wealth, the FDI from US comes in terms of financial services, in terms of foreign institutional investors. And that is what Western Australia can really tap into, because all the conditions are already available for that within Australia. And it is easier to extrapolate that within Western Australia, putting those financial systems in
Thank
place.
you. Okay, Sherman, final comments from you on that?
I think it's almost a no-brainer that you could actually get funding if it's the right kind of projects from ASEAN into WA. One thing that we cannot forget is two very important things. One is the supply chain, right? That we have seen in COVID, what happens with supply chain. So food, for example, production of food and so forth, they would want something that, especially as their population gets wealthier, they want better food, as an example. So things like proteins and so forth that we currently grow even in WA, as an example, those will be able to more than likely actually get quite good investments at almost any size in that sense, as long as they look at offtakes and so forth. Because in Australia, we can't consume we can't consume all the things that we actually produce in many ways. The other way to look at it too, from a flow of say funds, investments, and so forth, is that a lot of it will be the Chinese are still interested in Australia. It's how are they going to actually do that? To invest into Australia without offending the geopolitical side of things. They may go via, say, Singapore or one of those mechanisms. So there is still money there in that sense that you're going to see that's going to happen. It's how do we actually know how to tap it, and how are we going to actually maximize that? Another very simple one that we keep on forgetting is this. One of Australia's largest export was actually education. Therefore, a lot of people that we actually educated are now actually net promoters of Australia in many ways. So from an investment point of view, they are back there. They are going to try and look at opportunities here. So even though I sound like a very grumpy old man and negative in many ways, there are actually some light at the end of the tunnel if we actually nurture those people and actually nurture those kind of relationships, if we are smart enough to actually do that. And I think WA is in a way in a box seat because of the time difference that you actually have. And one of the jokes that I have with a lot of my WA friends, I say, hey, 3 of your top suburbs are actually overrun by Asians because it's cheaper for Singaporeans to buy a investment property in WA to play golf and fly back in the past, right, than to play a round of golf in Singapore over the weekend. And then they look at one good thing about Australia we can be proud of, that we don't talk enough about it. And every time when my friends first come to Australia, they will say, oh, it's so boring. There's no shopping, for example. Shops close at certain time. But then after they live here after they go on holidays here for a week, they go, man, you've got a great lifestyle. So I think these are some of the things that, WA can actually work on and actually attract some of those as we become a more COVID normal. So I think I want to end on one thing. We should start actually looking at some of the travel bubbles that is actually happening. As an example, I'm watching it with a lot of interest between Hong Kong and Singapore, the travel bubble, how it works. So how we can actually get Daniel back from Singapore into Australia and then get him back there in Singapore in many ways to be a promoter of Australia in some ways. These are some of the things that I think we should actually start looking at right away and start building on that.
Fantastic. Not to correct Anita, but we're only 3 hours difference from the East Coast here, not 5, but it just feels like 5. And we are in the same time zone as Singapore and KL and Manila, Shanghai, and Beijing. So Daniel, you're in our time zone. I'll turn to you for final comments.
To pick up on what Sherman and Anita have said, there is enormous institutional goodwill toward Australia. A lot of it is soft power. We tend to think of investment as, a big BHP plant or, a new mine, if we're talking about WA. But, there's a tremendous amount of, informal goodwill. Let's also distinguish between the type of investment, and Sherman alluded to that. I'll just add some color. One feature of the past couple of years has been the growth of private wealth management in Singapore, and big firms like Deutsche Bank and others getting staff into Singapore to cater to that. There's been significant growth in family offices here. These are folks who are looking to put their money to work. It doesn't have to be buying a new mine or developing a new iron ore processing facility in the Pilbara. I think the other thing that Western Australia has to do is distinguish itself. People have a sense that it's big and it's vast and you can grow stuff and you can dig stuff up. How does WA differentiate itself from those dread eastern states? It sometimes feels like WA is another country now. There's a subtlety there toward that marketing, but I'm convinced WA can pull it off. And you know, the soft power thing, look, people can't go to Bintang or Batam or Johor Bahru to play golf right now. They may be getting into WA sooner.
Well, as somebody who has been in WA for 7 years now and only earlier this year naturalized, I couldn't agree with the tenor of the last panel more. As we look to emerge from the COVID-19 pandemic, I think there's going to be a lot of focus on quality of life, the relative governance of a place where we have been relatively well governed. And if we truly adopt our Asian engagement strategy and look to our near neighbors in Southeast Asia for sources of tourism, for education, and for investment, my guess is that will be a very important part of emerging from this current pandemic. Again, my apologies to those of you that we've gone over time. The conversation was fascinating. Thank you so much, Anita, Daniel, Sherman. We appreciate your insights, your time today. We're going to wrap up today with a short video. We've, over the course of this week, done a number of short videos looking at individual WA products. We had Mura Citrus, we had Vast Felix Wines, and today we have a short video from Marine Produce Australia. We hope to stay on and watch that. And to our panelists, the good news is these will be up online, and so we'll be able to share this conversation beyond a one-time room. It'll be part of our ongoing efforts to build collaboration between Western Australia and the countries in Southeast Asia. Thank you all. Enjoy the video. We look forward to being in touch.
Marine Produce Australia began in 2004 off the back of a pearling operation located in the Buccaneer Archipelago. So over the last 16 years, MPA have developed the well-recognized brand Combe Bay Ocean Barramundi and has become a favorite in restaurants across Australia. MPA currently employs 52 people in Western Australia, of which 48 are based in the Kimberley, supporting our farming operations. The rest are based in Perth. We're the only ocean-based barramundi producer in all of Australia, and the fact that we are in a very remote location comes with its own challenges, but I think it's something that we've learned to deal with. The benefit of being in such a remote location is that we have the best products at all in all of Australia. We grow the fingerlings from 1 gram to 4.5 kilograms, which is our harvest size at our Combe Bay farm, located in the north of Derby in the Buccaneer Archipelago in what we call the Kimberley. This process to grow the fish takes around 24 months, at which point we harvest and then we supply both to the local markets in Australia, but also to select export markets. We are selling our products to all the Coles supermarkets across Australia, and several times Combe Bay Ocean Barramundi product has won Product of the Year. We're part of a regional company. We have an operation in Singapore, we have the operation in Australia, and we are now building an operation in Brunei. We also have a sales office in China, and we are selling with partners in both the US and other markets. So we have a very diverse set of investors from actually all around the world. A lot of the money that has been invested as of recent has come from the ASEAN investors, where I think there's a strong belief in, I think, the quality of the Australian product, the heritage of barramundi being the national fish of Australia, and the provenance, the sustainability profile it has, I think is something that resonates very well with the ASEAN consumers. We are already selling to select capitals in Malaysia, Thailand. But I think as the middle class is growing, as consumers become more affluent, demanding more quality products, we are seeing that demand for our type of product is increasing. Our typical approach is to start with the capital, so targeting the likes of Jakarta, Hanoi, and Bangkok would be ideal places to start, and then eventually expand to more than the capitals. The ASEAN market will be a key focus for us in the future. I think that there's a number of reasons. The sheer size of the population of the ASEAN markets is something that makes it very attractive, along with the purchasing power that comes along with that. The middle class expanding, they will be asking more questions on the provenance of where's this protein coming from. Obviously the link between the Australian sustainability profile, that's something that we believe is very attractive for consumers. In ASEAN, the links are very close, the ties are close. That goes not only for aquaculture, but a number of other industries as well. We are engaging with a lot of investors represented across the ASEAN countries. That's something that will only increase over time. We have a very close relationship with the Western Australian government, with whom we communicate regularly. I think we have a weekly catch-up. They are immensely supportive of our expansion plans, represents a great way to create more business, more opportunities for employment in the region. So we're getting a lot of support on. So I think there's no scarcity of visits from ministers and interest. So I think it's very positive. There's an opportunity to create a range, a variety of different aquaculture products, from kingfish to abalone to mussels, oysters, barramundi, of course, and prawns. So I think the long coastline, in my mind, is one of the best places to really farm fish and shellfish in the world. The quality is just outstanding. And obviously the proximity to the ASEAN markets is something that is recognized. It's almost considered as a neighboring country. So I think it's certainly something that the businesses can offer. For the products exported out of Western Australia going through some of the main hubs, I think there could be a benefit in creating more affordable export facilities in the north of Australia that would allow easier access to the ASEAN markets to get the fresh products delivered even faster in a more cost-efficient manner.